Hi everyone, I'm Larry Levin, President of Trading Advantage, and welcome to our Trading Advantage Mastermind call. This is where the Trading Advantage coaches and I discuss what we're looking at throughout the trading day. Please keep in mind, trading in any market involves substantial risk and is not suitable for all traders and investors. Today is Tuesday, July 19th, 2016. We're going to start with Dan O'Brien here to my left. Dan runs our futures day trading room, and Dan, you say we're getting into the summer trade. I think we all love summer, except when it slows down the markets and the volatility. What are some of the smart ways to deal with this?
Well, patience in a couple of ways. Number one is that when the market isn't bouncing around and you get maybe one or two opportunities to hold something a long way, at least you try, you need patience to let it come to you. If you overdo it, if you try and trade the way you normally would when it's volatile, you're going to wind up buying the middles or the highs of a very long, what I call a coffin of congestion. And the angst that goes with it is just not worth it, even if you get out at break even. So we're trying to practice a lot more patience, waiting for the market to come to our normally floor traders levels. Old highs become new support, which have been working quite well. And then once you're in the trade, you have to be very patient to hold on to it and let it go. Because unlike when it's volatile, it's not like the market gives you an opportunity to profit and then it's instantly gone. It just goes up and goes sideways for 90 minutes. And then, you come back from lunch and it might go a little higher, and then sideways for 2 solid hours. So you just have to be very, very patient. So the volume is falling like a rock as we go higher, which would normally mean that, look out, there should be some sort of excitement pretty soon, because you normally need volume to support much higher prices.
Sure.
So hopefully that's coming. But right now you just have to be very patient in everything you do.
Got to learn to wait, right?
That's right.
And cut your size, right? If you're normally a guy who's doing 6 or 10 or 12 trades in a day, maybe you're doing 4, maybe 6.
Right.
Okay, good. Well said, Dan. Let's turn over to Mike Shore, who runs our options room. Mike, your subject today is Big Blue, IBM, for those people who don't know. Maybe not necessarily a stellar performer.
So we're rolling into earnings. We're just getting into our first battery of the banks have largely reported. Now we're getting into some of our bigger names. So with IBM, what we're looking at, and like you said, not a performer on earnings. In fact, 7 out of the last 8, they've been down to the tune of, on average, probably about 5%. And the one time that it wasn't down, it was up a penny. So, I'll count that as 8 out of 8 down. But then when you look at the sector itself, I mean, tech in general, outside of Apple, has been actually a leader, and then the chart itself has been kind of strong. So instead of just taking this kind of just secular down move, it just kind of felt like, oh boy, we should at least give ourselves the room not to get smoked on the way up. And so what we did, and there's kind of 2 parts to this conversation. We did a strangle swap, which is basically doing a put calendar and a call calendar at the same time. So you're looking for a measured move, hopefully targeting either one of your short strikes. So in this case, we did the 52.5, 152.5, 167.5 strangle swap. The front month being July 22nd, the back month being regular August. And so we're looking for a grind to either one of those. What's interesting though is that you have to realize, and with the skews, which means the different volatilities at different strikes, that there's a wide, even for something like IBM, which is a relatively low implied volatility stock, you had a big difference in what the put implied volatilities were the calls, which means that basically they were going to smoke vol to the upside, and vol was not going to come down as much to the downside. And so even though the spread itself was equidistant, so you would expect it to kind of look the same on a price chart, that the P&L would be a normal distribution. It wasn't like that at all, because implied volatility we figure is going down to about 17 or 18 on the upside and like 22 or 23 to the downside. So it gave us a thing that looked really, really nice to the downside if we got that move, and then was kind of almost, if we got the 5% move or so that was priced in, it would be kind of a scratch. IBM was all over the board yesterday after the earnings release, so I don't know if you saw it, but it got down to, I don't know, it probably got down to like 55 or something, and then up to like 65. It settled
155.
155. Yeah, sorry.
I was gonna say, what?
No. Well, yeah.
Because if we went down to 55, we'd be a buyer, right?
I'm a buyer. That's big support.
1974.
Big support. But what it actually did is it's settling in here right before I came in here. It was trading 161.31 was the So in our case, I call it a have your cake and eat it too. I was bearish, which turned out to be not really all that correct, but which would have given us a really great reward to risk. But still, if it was anywhere within what the measured move was, it was going to be a small winner to a scratch. And so here, like, you know, we paid we trade $1.40, $1.45, depending on where people got in. This thing's gonna be trading, you know, 160, 170. So I mean, it's not a win. It's not like you knock it out of the park. But I call it have your cake and eat it too. Be wrong and get money for it. I'll take that every day.
Is the real key there staying between those prices of the strangle swap, 152 and 167? If it breaks out of that, is that bad for the position?
If it breaks out too far from that, it's bad for the position. And then you have to correlate in. Well, if it breaks it to the upside, probably vol's going to come in even more, which is going to be bad for the spread. Sure. To the downside, if it starts breaking through 155, 154, then you could say, well, maybe vol's not even going to come in at all, or just barely, and which is good for the spread because it's a long Vega spread, which means that as implied volatility doesn't come down in this case, that's good for the spread. So this thing was protected. I mean, it was protected down like, I don't know, like 14%. I wasn't worried about that at all. To the upside, it was a little bit, you know, iffy. But, you know, I mean, if you lose 20, 30 cents on worst case scenario on something you paid $1.40 for, it's no big deal. But here it's going to make a little bit of money.
You think today is the exit day of that?
Oh, yeah.
Cool.
Yeah.
Awesome. Well
As soon
done.
as you walk out.
Yep, I'm going right now. If I can.
That's about 3 minutes.
Yeah.
Cool. All right, let's turn over. Thanks, Mike. Let's turn over to Chris Mullaney, who works with our prop futures traders. Chris, you've got possible signals in the new front month of crude oil and maybe something in the NASDAQ. Why don't you tell us what's going on there?
Yeah, August was a pretty interesting month for oil. You know, we opened up lower, then rallied up, then came back down, and now we're kind of, we just rolled over to September. So we're still forced to use some of those August levels until it expires tomorrow. So then we'll be kind of on our own. But as we're kind of drifting into middle of range and stuff like that, you know, I just want to be very cautious. If we can start hitting the back down by the lows, I'm going to be looking to sell it. So right now I'm kind of being patient. And something I wanted to add to what Dan said yesterday. So with equities, we're kind of seeing these summer markets. In NASDAQ, we waited and we caught one signal. We were in it for probably close to 45 minutes or so, and it was profitable. But after that, that was like the one and only thing that we could have had because it just drifted sideways the remainder of the day.
That's right. Same kind of idea, huh?
So it was a perfect.
Right.
It was a perfect entry. It did exactly what we wanted, but you know, after that was it. We never had any other opportunities.
Okay. I want to go back to something you first said, right? That you're trading September. September's the front month. That's where the
Yes.
heaviest volume is right now. But you're watching August levels. When August goes off the board tomorrow, will you start trying to look at SEP levels, or will you still?
Yeah, definitely. We'll have at least 3 days of data of that contract,
Okay.
and we'll go from there. And it's a pretty nice thing with oil because the contracts expire every month. So we're constantly looking for these breakouts where you know, something like equities, you have a rollover every 4 months. It has a lot of time to kind of tread sideways.
I think that's a good lesson for people out there to understand that is especially something that rolls over monthly like crude does, that that sometimes you're trading the front month, but you're using levels from the previous month,
Right.
at least for a few days, as stuff builds up. So I think that's good for people to know. Thanks. Let's turn over to Charlie Lewis. Charlie, you mentioned upcoming meeting between Theresa May and Angela Merkel. You suggested some tea, crumpets, and maybe a macro solution.
Yeah, absolutely. I think the ladies are getting together in Europe tomorrow. And I think that they're probably going to bring some realism to the proposition rather than the hysterics which followed the Brexit issue. So Germany has a very large trade surplus with England, with Britain. So I think it's unlikely that Germany is going to be pushing very hard to be as tough on the British as, say, for example, the French would like to be. Sure. So I think that we're going to see a solution. And in the meantime, the market has generally been in the British pound in a pretty well-defined about 5-cent range between $1.30 and about $1.35. Today, by the way, while we're here in the meeting, we've got a really nice break down to the 130-150 level. We are looking to go buy side at the 130-100.
In the pound?
Because, yes, in relation to the dollar. Because that is sort of towards the lower edge of that range that we've seen over the last few days. And now with this meeting coming up tomorrow, I think that what we're going to get is some statements of reason rather than histrionics and sort of recrimination or what have you.
So they'll come out after the meeting and talk to the press and tell them
Yes,
everything?
absolutely.
Tell us
And they'll
everything.
come out together and they'll hold a nice little bouquet of flowers, and they'll have the flags behind them, and it'll be nice.
Okay.
So that's what we're looking for.
We'll keep an eye on that, thank you. All right, let's turn to Charles Moon, who runs our equity room. Let's talk Nintendo and Pokemon Go. You said to be cautious about chasing Nintendo. Don't chase it like you'd be trying to catch a Pokemon across a busy street.
Which, by the way, I've seen these kids and adults running around with their phone out outside of work. Basically, this craze has taken the world by storm. It's caused traffic jams. There's been meetups where thousands of people have showed up. We actually had one in Millennium Park.
6,000 people showed up?
Yeah, one of my friends actually went viral because he showed up in a Pokemon suit.
That's awesome.
I mean, 90-degree weather and a full bodysuit, he probably lost some weight. Reflectively, this is just gaining steam. We talk about breakouts. This is beyond a breakout. This is just gap, shoot and go. The U.S. tradable product, NTDOY, is actually just screamed off the charts. In Japan, is basically where it's following. They've had just extended daily gains, like around, I believe, 11:30 last night. Nintendo was up another 13%, but pulled back and was hovering around 8.5%, which is probably where it currently is right now. And in reflection, other equities like GME, which is GameStop, has seen a big boost. Yesterday we saw a huge rush of volume. We have filters that we use to see actual heavy buying volume or selling volume coming into market. And so we saw this, and then of course on our news feed 30 seconds later shows up that that the CEO talked about there's been a boost of 100% in sales that's related to Pokemon Go.
What is that? What is GameStop selling?
So they're actually the largest retailer for Pokemon products, whether it's toys or gift cards or whatever, anything, video games that's related to Pokemon.
The books, all that stuff.
Right, within 1 week, 100% jump, and of course everybody just jumped at the GME, and this is real. This isn't a fad. This is an actual trend.
It's going to last at least a week.
Well, it's gonna be a lot more than that. It's not my generation per se, but the generation right below me grew up with Pokemon. I grew up with Looney Tunes, Tom and Jerry. But they grew up with Pokemon, and it was so big in their generation. And you add the influx of people just loving app games because they're always on their phone, whether in the train, even in traffic when they're driving, they're always on their phone. So that combination has just caused this huge demand for this game. The revenue generation from this game is insane. They're talking about numbers of 6 to 15 million on a daily basis.
That's what I wanted to ask you, is if we knew numbers, right? Because the app is free, but
Right.
there's in-app purchases,
Right.
so you're saying 6 to 15
They're
million
saying
a day?
the low end will be 6 million, the high end will be 15 million a day.
Interesting. I mean, those numbers will come out, right? We'll see those
Yeah.
when they finally have to really report.
And I believe it. There's an app out there called Clash of Clans that really took, the world of storm. They had Super Bowl ads out there. They were generating easily between 2 to 3 million. And within 3 days, Pokemon Go became the most downloaded app on iTunes. And so the usership, and we're not even talking about the technology integration. We understand, we've talked about virtual reality, Trading Advantage is moving forward with virtual reality.
Sure.
This uses something a little bit different.
It's augmented reality. Right?
Augmented
Since
reality.
people first really, look at this, right? And
Right. I mean,
you hold your phone up and you see the world through your camera, and then
Exactly.
you also see Pokemon, who's not really there.
Right, and it's all about 3D mapping and integration. It's very similar to what Mobileye is doing with their technology and censorship, because Mobileye actually has cameras that will scan out and then produce a 3D scan of whatever vehicles around them. That's how it recognizes and acts in accordance. It's the same technology used for Tesla Auto Drive. And so that augmented reality, that 3D mapping, this is the first integration in an app. Well, there was an app a long time ago that came out. It was maybe 100,000 downloads and it fizzled out. Pokemon Go basically took that technology, and then all of a sudden it's globally just explosively popular right now.
Sure, it's like a dumbed down version of the Microsoft HoloLens.
Right,
Some
exactly.
people have seen out there. If you haven't checked that out, you should look at that on YouTube.
Yeah, and so instead of people trying to chase after, NTDOY, which is probably up around 130% from probably last Tuesday, the one stock that you can look into is GME. GME is broken out. There's a lot of positive news around it. You know, there's a lot of institutional money that's funneled into it on the buy side. Maybe that would be one that you're going to look for on the pullback or the breakout.
Cool, awesome, well said for everybody, thank you. Thanks for tuning in to our weekly Trading Advantage Mastermind calls. These happen every Tuesday at 8 a.m. Central Time. As always, we'd like to hear from you. If you have comments or questions, please email me at larrylevin@tradingadvantage.com. Thanks for listening, everybody, and have a great trading day.